Okay, so think about the last time you paid for something online. It was probably just a simple tap, a quick click, right? But behind that super easy experience, there's a massive hidden battle being waged for your money. Today, we're going to open the books on a multi-billion euro problem, payment fraud in Europe. Let's start with the headline number, 4.2 billion euros. That is a huge amount of money. And that's how much was stolen through payment fraud across the European Economic Area in just 2024 alone. It's an absolutely staggering figure, and it really shows you the scale of the challenge we're facing. So where is all this cash actually going? You might guess it's all about stolen credit card numbers. And yeah, that's a big part of it. But the data, well, it tells a pretty surprising story. You can see here, card fraud is a massive problem. We're talking 1.3 billion euros. But look at credit transfers, the bank-to-bank payments we make. That accounts for nearly twice as much stolen money, a whopping 2.5 billion euros. To really get why there's such a big gap, we need to get inside the mind of the fraudster. And what you find is it's not a one-size-fits-all kind of deal. No, they have two very different playbooks. One for when they're targeting your bank transfer, and a completely different one for your credit card. It really all boils down to one simple question. Are they tricking you, or are they just robbing you behind your back? On one side, it's all about manipulation, social engineering. They convince you to send the money yourself. Think about those fake investment schemes, or those calls from someone pretending to be from your bank. On the other side, it's just pure technical theft. They steal your card details and go wild with them, often without you having a clue until you check your statement. And when it comes to those really high-value credit transfers, manipulation is absolutely king. Get this. A massive 74% of the money lost in 2024 wasn't actually stolen. It was given away. The scammer is so good at what they do, they convince the victim to authorize the payment themselves. They don't have to break into the vault. They just trick you into opening the door for them. But for card fraud, especially the online stuff, the playbook totally flips. Here, 56% of the fraud comes from that classic card details theft. It's not about tricking you into a conversation. It's about stealing your data from a hacked website or a phishing email, and then using it to go on a big online shopping spree. So you've got these two very different kinds of attacks. What's our defense? Well, Europe has built something of a digital shield, and it's designed to stop both kinds of fraud in their tracks. It's called strong customer authentication, or you'll usually see it as SCA. And you probably use it every single day without even thinking about it. It's that extra step when you pay for something online, the code that gets sent to your phone, or using your fingerprint, or having to approve the payment in your banking app. It's all about proving that you are really you. So the big question is, does this digital shield actually work? Well, the data is pretty undeniable. Just look at the difference for card payments within Europe. The fraud rate for transactions without SCA is literally double the rate for those that are protected by it. It's safe to say the shield holds. Which, leads to a pretty logical question, right? If this digital shield is so great, why on earth don't we just use it for every single transaction? Well, the answer is really a trade-off, isn't it? It's security versus convenience. For little things like tapping your card for morning coffee, or for a recurring payment like your Netflix subscription, or sending a few bucks to a family member you've paid before, forcing that extra security step every single time would just be really annoying. So the rules allow for these common sense exceptions. But of course, exemptions can create gaps, and sometimes fraud does get through. And that brings us to what might be the most important question of all. When a scam actually succeeds, who's left holding the bill? And for credit transfers, the answer is, well, it's pretty shocking. When you're tricked into sending money, who pays for it? You. The slide uses the official term PSU, which stands for Payment Service User, but let's be real, that's just a fancy way of saying you. And you, the user, end up bearing 85% of the financial loss. The banks, they only cover about 11%. So in these social engineering scams, it's the victim who almost always pays the price. Okay, but for card payments, the situation is completely different. Unlike with the credit transfers, there's no single rule for who is on the hook. Who ends up paying for the fraud can be wildly different from one country to the very next. Just look at this contrast. It's incredible. In Slovakia, the user, again, the PSU, is on the hook for nearly 90% of all card fraud losses. Whoa. In France, it's a bit more of an even split.
But then you look at a country like Ireland, where the banks, the PSPs or payment service providers, they absorb over 80% of the cost. It means your financial risk literally depends on your postcode.
So just to recap, we've got different fraud methods, we've got a digital shield that has some holes in it, and a total patchwork of rules about who pays. But there's one final, really big vulnerability we have to talk about, and that's the cross-border loophole.
So here's the paradox, right? The vast majority of the payments we make every day, they happen inside our own country, where our digital shield is at its strongest. And yet, the data shows that most fraud actually comes from transactions that cross a border.
I mean, this chart just makes it crystal clear. The fraud rate for a domestic card payment, it's tiny. It goes up a little bit for payments inside of Europe. But look at the fraud rate for payments to a merchant outside the European Economic Area, where those SCA security rules might not even apply. It is a staggering 17 times higher. That right there is the weak point in the system.
And it leaves us with this fundamental question for our digital age. Our financial lives are global, they're instant, but our best security tools, they're often local. So as our money moves instantly across a world that doesn't really have digital borders, whose job is it, really, to keep it safe?